Keith Fitz-Gerald, if you guys don't know who this guy is, he's been around the business for 35 years. You started when you were 12.
Yeah, I made my first trades as a teenager using my lawnmower money because I knew I was going to have to pay for my college education one day.
I believe that. I paid for mine. Did you pay for yours?
Yes, I did.
See, that's why we're here today.
Exactly.
Don't spoil your kids, okay? Honestly, that's the secret. Yeah.
Make them work for something, understand
value.
value.
They appreciate it, and they won't be partying for 4 years, right?
Well,
let's snuck it a little
I
bit.
joke about it, but you'll join the 1% when you decide making money is more important than attending the next party.
Right, it's true. Or you are running that party,
Absolutely.
making money.
Absolutely.
That's
the key.
Was that you?
Yeah, we work on it. We ran a late night in school. We opened one night a week and made enough money in a month to deal with everything else. It was great.
Yeah, so let's get into the stock market. He's a chief investment strategist. Yes, you have 3 million subscribers.
Yeah, it's the number varies obviously, but
you must be doing something right.
Well, we are very simple in what we do. We are honest. We go for results, and the proof is in the pudding.
Right.
If people like what we have to say and they value what we have to say, they're going to be part of the family.
Absolutely.
And so we're very straightforward. I'm a simple guy. I want the odds on our side every single day. I don't like losing money. That means doing some simple things, following the unstoppable trends, each of which is backed by trillions of dollars, distinguishing, prioritizing companies that are must-haves versus nice-to-haves, and of course, risk management. For a lot of investors, that's an afterthought.
Right.
But it shouldn't be.
Just think of the reward. Most people do.
Yeah, you manage the results and you will have the wealth.
Exactly.
You can't just throw money at the wall and see what sticks.
Right. Okay, so you have $5,000. That's all you have, and you need to invest that in one company. Which one would you pick today?
Well, here's the thing, right? That obviously depends on your personal background, your risk tolerance. Is that 5,000 part of 5 million, or is that all the money you got?
That's all the money you got to invest.
Well, then in that case, your objective is you don't want to lose it to begin with.
Right.
And if you're doing it, you want to put your money in a place where you know it's going to work, where you have seasoned management, the best companies in the world, the best opportunities for reinvestment. I have something called my Desert Island Fund.
Okay.
It's the Vanguard Wellington. It's been around since 1929. It's a mutual fund that gives you the biggest, the best companies you can buy, has built-in safety brakes in the form of bonds, which means you're not going to get clipped if the markets go haywire.
Right.
You're going to have some ups and downs. That's normal, by the way.
Sure.
But if I have to go away to a desert island for 100 years and leave one choice to my unborn great-grandchildren, that's it.
Not Amazon?
No. No, Amazon's a great company and it's going to change the world.
Yes.
But your question was, what's the one I'm going to buy and I know is going to be there? Well, I'm not just going to buy one company because even Jeff Bezos is a risk. But Vanguard Wellington, with 500 of companies in there, with the best and the brightest, with dividends and reinvestment, with the bonds, that's a balanced approach. It's not like watching paint dry. It's going to grow your money.
That's awesome. And what do you expect that to grow annually?
Well, again, it totally depends on market conditions, but this is a fund that's had plenty. I mean, again, this is one of those things. You hear a balanced fund, you think this is for little old people with gray hair, and it's like watching the grass grow or the lawn, turn green or something.
Right.
Not the case.
Not. Okay, so
this
it's exciting.
fund, this fund has had plenty of 20% years.
Because our viewers want excitement.
Exactly. So, but your question was, what's the one I'm going to buy? If I'm going to be there, that's the one. If you want Zoomer, Amazon. Imagine how cheap that thing's going to be in 20 years.
When we come back, we're going to get into some really, really good stuff with Keith here. Stay tuned.